Good morning, everybody, and welcome to Beat the Bell, presented by Kane Capital. Today is going to be a major day, a massive day in the markets, the most anticipated FOMC since last FOMC. Every time we do one of these, everybody gets all riled up. But the question is, will today's FOMC and interest rate decision really move the markets? We don't know for sure. And here's the thing that really has me questioning if this FOMC is going to have as major of an impact as those in the past. The futures are pricing in a 99% chance that the Fed raises by 25 basis points. So we may not get a surprise there. If we do, that could surely stir some volatility. To talk about FOMC, to talk about earnings, to talk about all things the stock market, we've got a panel with us today, starting with Money Mander. Good morning to you, Mander.
Good morning. Yeah, you took half the Fed forecast already. That's what we were going to talk about. But 50 basis points, I think, is off the table, and we'll get into what we think is going to move the markets outside of that in a second.
All right, you guys will do a much better job of explaining it than I just did. So excited to get into that. Noah, good morning to you.
What's going on? I love the this is the most anticipated FOMC since the last FOMC. That's a great line.
It's true, and every time everybody gets so juiced up, and in this current environment, it is true. It's important to hear what the Fed has to say. All right, let's go Ramsey Rippers. Stock Sniper.
Good morning. Let's make some money today.
Good morning. Good morning. And Mo Mamba.
Good morning. Big week. Big earnings week too. So let's see what we get.
Yes, sir. All right, let's dive right into it. We're going to go over to Money Mander and Diamond, who've got Fed forecast and earnings outlook for us.
Yes, sir. So let's just go ahead and start with the economic calendar. As the guys mentioned, today is going to be a massive day in terms of news releases. We've got S&P Global Manufacturing and ISM Manufacturing PMI coming out at 9:45 and then 10 o'clock. Jolts at 10 o'clock is going to definitely cause some volatility in the market. And then obviously the much awaited FOMC interest rate decision at 2 o'clock, and then the Powell press conference at 2:30. So today is Fed Day, as Alejandro mentioned. All but consensus that the Fed is going to raise rates by 25 basis points, bringing the federal funds rate up to that target range, that 4.5 to 4.75%. Investors are really going to be looking for that forward guidance, right? That's really going to be the key. Since the interest rate decision, the amount of the hike is all but certain, people are going to be looking for any forward guidance that they can get on the future path of rates, regarding whether they're going to raise in the next meeting or where they're going to stop raising rates. That's really going to be pertinent for today. The markets have rallied much of this year as bonds are pricing in the fact that we're near the terminal rate for the Fed. So the market believes the Fed is just about done with their rate hikes and that they should pause soon. And the employment cost index data that we got yesterday sort of bolstered the idea that some of the wage gains that we have seen, over the past year have started to cool. That's been an upward pressure on inflation. And so it's good to see those come down. And I think that that's, really put a floor into the market. And that's, given us a bit of juice here in the past couple of days as we've seen the market trade higher. Furthermore, the market is pricing in a peak rate of about 4.9% in the federal funds rate by the summer. So again, this 25 basis point hike is going to put us at 4.5 to 4.75. The market's pricing in just about 4.9 as the peak rate, while also expecting 2 rate cuts before the end of the year. Conversely, Fed officials have the average terminal rate set at 5.1, so a little bit higher than the market is anticipating. And Powell has previously dismissed the possibility of rate cuts in the second half of this year. So it'll be interesting to see if that forward guidance sort of changes going into this meeting.
Spot on. Ryan, pull that up for me again. So this was exactly what we just got a month ago. It was their 2023 outlook at the end of the year at their December meeting last month, right? This is the dot plot showing you 17 of 19 participants foresaw ending the year above 500 basis points. Like Diamond said, I think that mid-range rate was at 5.15 or somewhere in there. Right now, the bond markets are pricing in. If we can go over here to the end of year pricing of the bond markets, they're actually pricing in less than a 4% chance that we end the year over 500 basis points. So ultimately, someone's got to be right and someone's got to be wrong here, right? And conversely, there's over a 46% chance that we actually end the year under where we're going to be at today, assuming that 25 basis point consensus puts us at 450 to 475. The Fed has said many times there's not going to be any pivot. If anything, they'll get a pause and monitor data into the end of the year. There's a 46% chance being priced in right now that they do pivot and we end the year lower than we'll be today. So I want to pass this back to Diamond, right? Someone's got to be right and someone's got to be wrong here. Do you think the Fed is trying to be overly hawkish to get financial conditions to tighten just off of speech? Or do you think the bond market's really not taking them seriously when really since 2020, they've been spot on in monetary policy talk? Pretty much everything they've said since the start of COVID, they've done. So who are you calling BS here on?
Well, it's interesting because we've seen the rally in treasuries to start the year. And going into this meeting, we have traders like record net short treasuries. Ryan, if you want to pull up that chart, right now that's the other chart, the white and black one. There you go. So we're actually the aggregate treasuries, net non-commercial future contracts. As you can see, we have a record net short here on treasuries going into this meeting. So that implies that they believe the optimistic scenario that the bond markets have sort of been pricing in this first month of the year has gone a bit too far. Treasuries obviously rally as interest rate expectations have gone down. And so going into this meeting, people are sort of fading that that sort of consensus that we've seen the entire first month of the year. Additionally, for the short term, right, we have the market in a situation where we have high volatility, obviously, going into this sort of event. And what you're going to get is that volatility is going to come down. So people hedge the market by buying puts, right? Which means that market makers and dealers are going to be short those puts. And then obviously after the event, when the event volatility starts to drop, the market makers and the brokers are actually going to buy back stock, right, as they get out of that short put position. And so that could actually put a bid under the market, as Jim Carson actually shared on Twitter. That's definitely a possibility regardless of what happens today, right? Whether the Fed, obviously we're pretty sure that they're going to raise by 25 basis points, but regardless of what they say, that's a likely outcome of this event is you get sort of this underlying bid on the market as that volatility comes down. And then additionally, the last thing that I'll point out going into this meeting is that we have S&P put premiums are at the lowest that they've been since last year. So that implies that people are not out here buying a ton of downside protection, right? We have the price of downside protection right now is just as low as it was last January when we were trading at all-time highs. So it's definitely going to be an interesting scenario, particularly if we get something unexpected from Powell in his press conference. I think that could really shake up the market and bring us some volatility.
Yeah, I think the keys to listen to, exactly like you said, is going to be any guidance and solidification towards where they still see rates going for the rest of the year. I think any higher for longer, any confirmation that they're still holding on to that 500 basis point narrative by the end of the year probably sends us lower. And really, I think anything outside of that, even just no comment on the issue, probably keeps us in this uptrend, at least until earnings season. And, then you take it from there. But that's going to wrap up our Fed forecast. Big day today.
Awesome. Thank you, guys. We're going to go ahead and talk about the system now. For those of you that are unaware, the system's the 10 SMA and the 50 SMA on the 30-minute SPX chart. So I'll quickly recap what we've seen so far today and then talk about what I'm expected heading into FOMC Wednesday. So we've got some multi-time frame analysis going on right here. This is a perfect opportunity, by the way, for me to shout out TrendSpider. Reminder that this show is brought to you by TrendSpider. Phenomenal charts. You guys can see the quality itself just by taking a look at my chart here. But let's get into this. So we got the technical sell signal, the 10 SMA crossing below the 50 SMA and the 30-minute SPX chart. Up here we have our 30-minute. Down here we have our hourly chart. Now, why is multi-time frame analysis very important? Why do I always not only just look at the 30-minute or not only just look at the hourly chart? I use them both in conjunction. The reason is because we want both charts to be telling the same story. So although we got the breakdown below the 50 SMA, which was good for about 15, 20 points in the cash session, in the morning, I actually took this short trade. In the morning, we sold off, and it ended up being like a nice 30-point short before we got some news. But that's besides the point here. What I want you guys to focus on is the fact that we never broke down below the 50th SMA on the 1 hour chart. So had you not been looking at this, you wouldn't have been able to recognize that the market was still in a strong uptrend on that higher time frame. So again, anytime I'm looking to take a trade using the 30-minute chart, I want the hourly chart to be telling the same story. Perfect example is the trade that I took yesterday. So we started to climb over the 50 SMA on the 30-minute chart. I got long. My risk level is the 50 SMA, the breakdown below the 50 SMA. Why was I confident in taking this trade? Look at the hourly chart. We're above the 50 SMA and above the 10 SMA on the hourly. They're telling the same story. They're both telling you that bulls are in control and there's momentum building to the upside. And this ended up being a really nice win. I'm actually still in this trade, and hopefully we see a little bit more upside today. But nonetheless, a nice 20-point win there. So again, this week was a lesson in the importance of not only watching the 30-minute chart in a vacuum, not only watching the hourly, but using them both together to make your decisions. And that should be able to clear up why things are happening the way that they're happening. So now going into FOMC Wednesday, I like to say I want to either be in profit or in cash. Now, I have some runners left. I have half of my position from yesterday's long trade still on the table, and I'm in profit with trailing stops in profit. So I'm not risking anything, okay? I haven't closed that position. Going into FOMC, it's important to understand that we're likely going to see some volatility, and that volatility can make you want to do some crazy stuff. And everybody knows that there's the potential for the market to move a bunch. And I'm sure, you guys who are listening or watching on YouTube have, made money in the past on an FOMC day. But I do always feel that at least leading up to the FOMC, it's important to be in all cash or in profit so that you're not risking anything. And then even after, don't feel the pressure to trade. I think that is one of the more dangerous things. It's one of the hardest days to trade of the month, right? If not the hardest, because of that volatility. There's a lot of potential reward, but that also comes with high amounts of risk, okay? So don't feel the pressure to trade. In my opinion, I'm just going to kind of let things settle. If there's a really good looking setup and something looks obvious to me, I will trade with super small size, but it's likely that I don't do any trading at all just to, protect my gains, protect my capital. Okay, guys. So now we're going to pass it over to Ramsey Rippers for Bet the Bell. I understand he's got a loaded segment for us this morning. Ramsey. For the system, I'm going to pass it over now to Ramsey Rippers for Bet the Bell. Good morning.
Good morning, guys.
That's the best thing I've ever.
That was the sickest shit ever, bro.
The best. Bring them in, Ryan. I want to see all their faces right now.
That was awesome, bro.
Dude, that's unbelievable. Great
so
job.
Good. So good. All right, guys.
That was so unexpected.
So unexpected. Look, we got the new Bet the Bell intro. We got the Bet the Bell stats that we're about to get into. We got our green and red question. I went back and I looked at every single episode that we've done. This might be episode 30. I believe that the total, the highest stat count includes 27 episodes, which was Hondo. So I went back with producer Ryan. We looked at every single green or red question. We put together the stats. Let's put them up on the board. Let's see who is the champ as of right now.
Let's go. Let's go.
As you can
All
see,
right, couple comments.
What's that?
Do I have the floor?
Yeah, go for it.
So, first off, Snipes, with the amount of shit that you have talked and the amount of shit that you have given us for like calling yourself the king of green or red You are so full of shit, dude. Number 5, that's hilarious. That's number 1. Number 3, so I came in at 3rd place, 52% hit rate. I've clearly I have more responses than anybody else. So I have more wins than anybody else because my attendance on the show is absolutely lights out.
No.
Hold on a second.
So how are we going to deal with that? Because that doesn't make sense to me. It doesn't make sense.
Before I say how we're going to deal with it, we're going to deal with it 2 ways. The first way is Ryan bringing Goggins. We were ready for this. Stop making excuses. Stop being a victim. Take personal responsibility. Stop it. And then the next way that we're going to deal with it is basically, I mean, look, you're 7 games. You have 7 games. You've played 7 more games than, first place. But at a certain point in time, the statistics, I believe, we're going to count everything as equal after, like, as long as you've take place in like 15 games, right? That's the minimum.
Law of large numbers. That's right.
Yeah. So, I mean, I think it's pretty fair. But, dude, look, I mean, you're right there.
I think I deserved like a yellow highlight or maybe like an asterisk next to my thing with like a little comment at the bottom.
Bring in Goggins again. All right. Well, there you go. Those are the stats. We're going to get after it. Snipe, I know you're taking a lot of shit from you guys right now, but this is the opportunity. We got another day, another question. You're about to get your ass right back there. Pop. If Mo gets a loss, you get a win today. You guys are tied for 4th.
Can we hear from Snipes?
Yeah, Sniper's pretty quiet, bro. Nothing.
All right, guys. So the
Go
indices.
on. Let's do it. Let's do it.
All right, guys. Indices trading relatively flat. We got FOMC obviously coming up at 2 p.m. today. Meta earnings at the close. Indices down just a tad right now in the pre-market, respectively. Q's down 0.1%. SPY about 0.25%. Green or red today? Money Mander.
These are the real coin flips when you have binary events like this. But I'm going to go with green. I think there's just really no shot that Powell comes in and shocks the markets with everything already priced in. So I think we get a little melt up.
Yeah, I think that's like the consensus answer. Diamond.
I'm going to go green as well because I don't think that there's a situation where we can sell off. Not that we can't sell off, but I don't think that there's going to be a situation today where we sell off unless he comes out and says something like absolutely ridiculous. I have a feeling that the markets are going to rip either way, regardless of what he says.
Snipe.
I'm going to have to go with green.
Alejandro.
Here's my problem. When the biggest perma bear I know is bulled up going into FOMC.
No.
I mean, here we are. You guys just showed me a chart. Put protection is the cheapest it's been since SPY was trading at all-time highs. We all come on the show. We say that, oh, the market knows exactly what's going to happen today. I don't see any reason for it to go lower. I mean, that's my thought too, but I got to go with red now. Everybody seems bulled up. I got to go with red. Even though my heart is telling me green, my brain is starting to tell me red.
All right, Mambo, what do you got?
Red. My heart and my brain is telling me red today.
All right, let's go. Let's go. I love it when not everyone agrees and we can get a shake up in those standings. All right. So next question. We're going to talk a little bit about sector performance. This question for today is targeted for the end of Q1. And what I want to know is which sector do you think outperforms the other by Q1, energy or financial? So as of right now, there's a lot of parity within energy and financials. Ryan, if you could pull up that chart that we sent you, if you have it. So right now, XLF and XLE, the respective overall ETFs of those sectors are basically performing exactly the same within 0.02% as far as the overall percentage increase. Both sectors performing well since bottoming out recent bottoms in September and October. XLF bottom took place in October, like the rest of the broader market, but it was only like 1% lower than the June or July low. So really, those June and July lows have held up and been trading to the upside ever since. Everyone knows it. Many experts, even people who aren't experts, have no idea what the fuck they're talking about. Believe that a recession is coming with severity and duration being the main topics of debate. I mean, my grandma even talks about it. Other questions remain as well. Will the tech sector continue these layoffs? Will supply chain issues persist? Will offices come back to life or remote work? Yada, yada, yada. So much shit to talk about. I want to know which sector is outperforming the other, energy or financials. Let's go Diamond and Mander. Diamond.
I'm going to go financials. And that is a bet on the continuation of commodity prices coming down. I understand that there's like a theory that we could get like a reflation, and you'll see those prices come back up. In which case, obviously, I think energy would outperform. But I'm gonna go with financials on this one.
It's funny that you mentioned commodities. I don't know how it might not be that relevant to this certain conversation that we're having right now, but Mander and I were talking a little bit about, or Mander was talking yesterday about copper. Mander, I don't know if you want to come in here. Give me your answer.
Let's save it for another segment.
Okay.
Another segment.
What do you think? Energy or financials?
Oh, for the two, I'm going to take financials as well. I think in the same boat that Diamond talked about, I think energy prices are set to roll over a little bit, excluding a reflationary incident. And financials, here's the difference. They perform similarly year to date, but you have energy at all-time highs and financials well off the peak, where I think they're in a good situation for a buyback until debt delinquencies start to become an issue. Who's going to benefit by the hiked interest rates right now? It's going to be those financial companies.
All right. Love it. Interesting. And our last question of the day, Ryan, pull up the tweet. So I don't know if this was a subtweet at each other. I don't know how soon that these tweets came off of each other. Jim Cramer says we're in a bull market. He says to buy. Michael Burry says to sell. That's really all we gotta ask. Burry versus Cramer, Christian Bale versus Cramer. What do we think? Diamond.
Yeah, that's Christian.
Is that Cramer?
No, dude, that's Louis C.K. I'm actually crying. That's the funniest thing I've ever seen.
Dude, why? Right.
I'm gonna go.
Well, because Christian Bale played him in the Big Short.
Right. Yeah, I got you. I'm gonna go with Burry. I saw people yesterday calling Burry the biggest fade, one of the best fades on Twitter, and the guy was wrong. I think about like Tesla. But everything else, I mean, he shorted the S&P from the top rope. I mean, he called the 2008 financial crisis. Like, don't be disrespectful, guys. Like, he's definitely not in the same league as Cramer. I'm gonna go with Burry on this one.
Mander loves Burry.
I love Burry. This is crazy that it's a debate and people are really like throwing this much shade at Michael Burry. You have one of the great bears of our generation who has been in front of pretty much both recessions we've seen now in the past 20 years. And then you have the biggest inverse stock market fade out there in Cramer right now. I'm 100% going with Burry.
Snipe.
Yeah, man, that's also a no-brainer. I completely agree with Mander, but who's going to back Cramer?
Maybe Mo Mamba?
Fuck that. Never, brother. Never. No. Burry all the way. You got price action telling you bearish. And I think the Tesla investment that Diamond mentioned overshadowed Barry's investments overall. So he has a little, bad rep to him, but definitely Barry. I mean, price action staying downside, so got to go with him. Full Cramer.
And Dwayne.
So this is interesting because I feel like I see every other week Cramer make a comment like this. I don't know how often he's doing this. I don't even know who's asking him these questions and like why he's still allowed to answer. But the guy is like bull market, bear market, like every other week. But everybody said Michael Burry. Fuck Michael Burry. I'm going with Jimmy Cramer for the reason that could he be wrong once again? Is the ultimate fade going to be wrong for the 1,000th time in a row? I'll bet against it. I think that we continue to run higher. It's my opinion.
Sooner or later, you got to be right. I mean, if you continue to say the same thing over and over again, at one point, you keep betting on red. It keeps pulling, black keeps popping up. Eventually, red's going to hit.
Eventually, he's got to be right. Eventually, he's got to be right.
Well, look. He did say buy the dip. So is he expecting a dip real soon this week? Who knows? He did say buy the dip.
Yeah.
So
I will say, Mo, to answer your question, he was talking about Monday as when he made that comment, he was talking about Monday. That's what he was talking about. That's the dip he was referring to.
He's setting himself
Okay.
up to not be wrong right away, right? By the dip. So you're thinking bullish, it goes down, but he's not wrong right away. You know what I mean? It's kind of like a nice money mander tactic. He likes to do that too.
Yeah,
So-
now
There's
we could
nothing
go
better.
down for a year, and Burry was saying this was just the dip I was talking about.
yeah.
For Kramer.
All
There's
right, guys.
nothing better than Kramer saying buy Meta at like $300 or whatever it was trading at, and then at $100 he said, "I admit that I was wrong." It rips back up to 150, and he's saying buy Meta again.
No,
you can't make that up.
Honestly, the best is Coinbase being a buy at 400, but at 40 it's too cheap, or it's too expensive at 40. All right, that's gonna do it.
Yo, Snipes is better than him at this point. I mean, Snipes is fourth, right? But shit, he's making better decisions. I had to, Snipes. I had to. All right, we're good. Let's move on.
Oh my god, look how quick Ryan was to put the standings back up.
He's gone. All right, guys,
he's
bet the bell is
pissed.
over. Hondo.
All right.
take it over.
Awesome. We're gonna wrap up this show now with Mamba Market analysis. Mo, this is a big one. I'm listening closely. Listening and watching closely.
Yes, sir. Yes, sir, man. This is a funny episode. We got that new intro on Bet the Bell, and then Sniper is just gone now. All right. So daily time frame S&P. What do we got? Rising wedge. Rising wedge is bearish. You're making higher lows, higher highs. You're looking for this thing to break down. Now, we do have some catalysts coming up, so this would be the perfect time for this to play out if it were to play out, right? How is this invalidated? Is if we do break through and hold the upper trend line. Again, we have this zone over here that we tested the other day. Do we test it again today and then reject? Is FOMC the catalyst that breaks through this wedge and we continue with earnings and NFP this week? Who knows? We'll see. But this is the biggest watch I think everyone has their eyes on, is this rising wedge, right? Even if we do come up here, this is a zone we have to break through and hold for further upside. That's the zone we did test the other day. That was our target. If you guys remember our episode on Friday, that was our target coming up in here. We hit it, rejected it, and came down. Now, lower trend line never broke. Looks like we tested it yesterday. And now we'll see what we get. Will FOMC be the catalyst to break us through? We'll see. If not FOMC, it could pump us up to the upper trend line, right? Make another higher high. So we could have something happen like this. Where's my path? Right there. All right. So if FOMC were to pump us, we could have something come up here, reject that trend line, come back through our zone, and then NFP could potentially break us through, right? Then we come down, come back and test this level. So we could get something like that if FOMC was bullish today. Who knows, man? The market's wild. Let's just see what we get day by day, candle by candle. This is a bullish close, but you have resistance right there, right? But I don't think that matters at the moment. You do have to pay attention to FOMC and what we get today. Big week. You do also have Apple earnings, Google, and Amazon, I believe, Thursday afternoon. And then you have NFP, something we talked about in the Discord, actually. It would be really sweet to see how this plays out, because if one of them comes out with bad earnings, they gap down, NFP comes out bad, what's going to happen to that ticker? Will be really interesting. That'll be it. Thanks, Hondo.
Yeah, we're definitely in for a lot here. Coming in to close the week. Thank you, Mo. Appreciate that segment. As always, that's going to do it for this morning's show, everybody. FOMC Wednesday, big day. Remember to manage risk, be smart. Don't do anything crazy, although you probably want to. Reminder that this morning's show was brought to you by TrendSpider. If you like the charts you saw, you can go to TrendSpider.com and use our affiliate link there for 25% off. If you're watching on YouTube, it's in the show notes. If you're watching on Twitter, you can go ahead and screenshot and head over to TrendSpider. But again, that's going to do it for this morning's show. We really appreciate all of you joining us. If you're watching on YouTube, if you could like and subscribe, that helps us out a bunch. Other than that, have a great rest of your day, everybody. And we will catch you on Friday morning at 8:30 a.m. Eastern time.